Okay, great. Thank you. A lot of answers are coming in. So again, once again, happy New Year to you folks. And all of us, we are hoping that this particular year is going to be a lot more better in terms of our own social lives and lives going back to normality. The hope was that perhaps, beginning at the start of this year, things will improve. But obviously, staying, because I'm based in London, I'm based in the United Kingdom, we are gone back into third lockdown, which is not really something that people were looking for. This is something that we have to deal with nevertheless. So a bit about myself. My name is Naeem Aslam. I come with a wealth of 15 years of trading experience. During this time period, I have worked as a hedge fund trader for Bank of New York Mellon, in equity trading for Bank of America, and currently I work as a chief market analyst for AvaTrade, where I help you guys to become better investor. So in today's masterclass, we will be talking about how to trade indices. We will be looking at the major fundamentals which are really going to move them, and really going to come up with an answer whether this is a good time to get involved into the market, whether you should be looking at perhaps taking some profit off, or maybe this is a time to sell that market altogether. So let's have a bit more conversation around that. So, but before we continue any further, as always, it is important for me to go through this disclaimer and risk warnings. Anything which will be discussed in this particular video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. The full disclaimer is right in front of you. Now, folks, as always, I'm going to go through some of the most important and critical information. So if you have attended my webinars before, please bear with me, but it is very critical to remind you guys again, and of course, making sure that the new users who are here, they also understand what I'm trying to say. So the most important thing in this particular world really is to get the information in time. And then the only way to get that information in time is by being on Twitter. This is the most critical thing, because all the major news outlets such as CNBC, Bloomberg, it takes time for them to produce that sort of information. But once you are here, once you are on Twitter, all that information comes straight to your telephone mobile. If you are not on Twitter, I would say that this is almost committing a suicide, because it is very, very important for you guys to be on Twitter so that you guys can get all that information pretty much straight away. And then I will show you that in a bit. So my Twitter handle is right in front of you, which is Naeem Aslam 23. And then you have AvaTrade's Twitter handle, which is AvaTrade itself. Once again, I will show you these handles on Twitter. In addition to that, on a daily basis, I produce quite a lot of content on a daily basis for you guys. So on YouTube, and the channel for YouTube for AvaTrade is AvaTrade, and for myself, it is Naeem Aslam. There are two different sort of videos which are produced. Firstly, it is a daily fundamental live YouTube session during which I discuss the fundamentals that are very much likely to move the market on that particular day, why the markets are moving higher or lower on that day, and in which direction the markets are more likely to move. The second video is about technical analysis. In this technical analysis video, what we do is we discuss about a bit more detail where are those buy and support zone. So the question is coming from Anil, and that's a very good question. With what time I am posting these videos? So Anil, all of these videos, they are done before 10 p.m. London time. So basically, the technical analysis video, which is right over here, it is pretty much out on the YouTube channel by 8:30 pretty much in the morning, 8:30 to 8:45 a.m. in the morning London time. The daily fundamental video, the YouTube session, which is your live YouTube session, which is your opportunity to discuss, that is between 9:20 to 9:40 a.m. London time. So again, everything is done before 10 a.m. every single day. So now let me go out and then show you how to follow these ones and then what exactly to make out of that. So this over here right in front of you, this is my Twitter channel, which, and then the handle for that, as you can see, is right over here, which is Naeem Aslam 23. So go on to Twitter. If you are not on Twitter, go on to Twitter, sign it up, and once you are there, search in the toolbox over here. It says Naeem Aslam. So I'm going to do that for you guys just to show you Naeem Aslam 23. If I can do it right, okay. So there you go. It is going to bring that account for you straight away on a Twitter. So you will see that. And as you can see, all the videos, some pretty good information is very much posted on a daily basis. And of course, a video. So this is very, very good for you guys to keep an eye on. Similarly, as for AvaTrade, make sure, please, that when you do type AvaTrade over here, you're following the right account with the blue tick, because we are verified on Twitter, so making sure that you are following the right account. Now, similarly, folks, let's give some thumbs up. Let's smash those subscription buttons right now while we are speaking, because there are more than 80 people right now, so we should get some really good interactions between here. So this is the channel Naeem Aslam on YouTube. So to click that Naeem Aslam, this will come, and then you will see a subscribe button over here. So smash that subscribe button, because what that will do, that will give you all the information, and then it will notify you as we go along on a daily basis that what information that you really need to look for. For example, earlier today we talked about Bitcoin price smashing 35,000 price level. So what is next? We talked about that. This was a live session in which I am sitting and I'm talking about various different asset classes, which covers Forex, which covers your equities, covers your commodities, and of course cryptos as well. So they are going on a daily basis. So it is quite an important thing for you guys to really to go on that. So once again, I'm gonna say to you guys to go back, go on a Twitter, smash that like button, smash that subscription button as well, so that you get that. Similarly, on AvaTrade, it is right over here. You type AvaTrade, and it will, you make sure that you're smashing this subscribe button, you clicking that, and so that you get all the information on a daily basis from us to you guys right over here, because it is quite important for you guys to get all that good information straight to your inbox, to your inbox. Now, any questions so far on this one? If you are not sure what is the importance over here, or why you should do that, or if there are any questions, please post them right now before we continue any further. I see many hands being raised, so suppose, all right, okay. So let's continue, let's move forward a little bit more, because as always, guys, the most important thing when it comes to trading, it is all about, being proactive, listening to things that we really talk about, and then really working on those particular aspects. Because if you guys do not react, if you guys do not respond to them, then there is no point of you guys doing what you are really doing, because the most important thing is to listen and to act on those information really. And one important thing that I wanted to quickly go through is that at AvaTrade we have this unique technology which is called AvaProtect. It is a revolutionary one-click risk management tool available on AvaTrade WebTrader and AvaTrade App Go as well. So basically, with AvaProtect you can purchase protection against loss for a defined period, and this really protects you for anything in relation to your to that. Now let's move on to agenda for today, which is why to trade indices, what is the importance of that, the inverse of indices. Then thirdly, we will discuss about the fund flow, defining levels, and defining strategies. So these are some of the things that we are really going to discuss in today's analysis, and we will really answer some of the questions which are going to be important on a daily basis for us. So let me just bring out the MT4 platform for you guys so that we can really continue with this one. Here we go. So this is our MT4 platform, and I'm sure that you guys are very much aware of this one. So as always, what we're going to do is we're going to start the analysis by looking at the daily timeframes. And on the daily timeframes, we have three different moving averages, which will remain the same across the board. This is your 200, this is your 100, this is your 50, and they're all simple moving averages. Now, for disclaimer purposes, I wanted to mention something to you guys, first of all, that as of day before yesterday, I have completely exited the market because I believe that the market has gone too far, too fast a little bit. And then the current lockdown situations that we are seeing in the market are likely to trigger a sell-off. We are likely to see correction in the market because look, the last correction which happened was back in October. Now at the time the RSI really went to this particular levels, ever since the market has been very much near the RSI of 70. So anything which is near 70, it represents that the markets are overbought, so meaning you should be selling the market. Anything which is near 30 represents the markets are oversold, so you should be really looking to buy the market around those price levels. So as you can see right over here at this point, when the market was hitting the bottom, the RSI was also hitting the bottom. And what happened afterwards was that the market started to move higher. The market moved to the upside after that, as you can see. So so this is the area where the market is really trading now. And in terms of RSI, we are very much moving in the downward direction, as you can see, but we are still far from reaching these ones. So for me, there was it just didn't really make me comfortable. It doesn't really make me comfortable. So what I really want to do right now is to sit tight and look for the opportunity. And the situation is very similar for the S&P 500 index as well, because once again, when we look at the S&P 500 index, we said that this was the bottom which was recently formed, and at the time the RSI hit its oversold level. And after that, we know that the market did go massively to the upside. As you can see, currently we are trading right over here, and during this period, the RSI over here shows us that we were very much trading near this particular price level, which the RSI level, which says that you should be really looking to sell the market. And now only we are breaking out of this one, and perhaps there could be move when it can really come in around this particular level. So again, for me, it doesn't really make sense. The price has touched the 50-day moving average recently. I will touch on that in a little while, a bit more, and we will have more conversation on that. But similarly, for the Nasdaq, once again, the price action is very, very similar as well. The prices are actually moving lower. The last time the RSI touched its oversold level was when the prices really retraced. Now the RSI is already losing its momentum. It is already moving to the downside. Similarly, we are seeing the same moves for the price action as well. So the hope is that this area right over here could be our first potential area of support, right in around these particular price levels, where we could see some sort of a movement to the upside. But right now we are not seeing that. Because of that, because we're not seeing that, if we don't see any movement to the upside from here, then really the price from here is going to move towards is 200-day simple moving average, towards this particular price area, and that support zone is very much going to be in around this particular price level right here. So we still have quite a lot of room left, and at the time, hopefully the RSI will be touching right over here. By the way, while we are speaking, we have very important economic data which has just been released, and that is your ADP. So ADP has, the expectations were that 73,000 jobs will be created. Last time it was 307,000 jobs were created, but now the actual data has shown that 123,000 jobs have actually been lost. So this is a very, very negative market news. So in terms of a price action, we're clearly seeing that the market has started to sell quite frequently. Market has started to move lower, and this further it further strengthens my view of the market. That's something that we talked about, the why I've taken the positions out, because on the intraday, on the 30-minute time frame, I'm seeing the markets moving lower on the back of this one. And if I see the gold prices, we should see a momentum to the upside, and we have seen a little bit of it, but not much move. But when we go into the intraday time frame, which shows the actual price action of this particular data, it shows that yes, traders are buying once again risk off asset, which is your gold, and risk on assets such as your Dow Jones and S&P 500 index. They are all selling them on intraday time frame. Intraday time frame are your 30-minute, your 4-hour, an hour, 15 minutes, and so on and so forth. So those are your intraday time frames. Your bigger time frames are these time frames. Now, the reason that I really think that the markets are really going to sell right now are as follows. So listen to me very, very carefully. So first of all, right over here, when we saw this particular price action, the price did come very, very close to its 50-day simple moving average. What happened afterwards was that we saw very, very small rally in the markets. The market only went a little bit high. And then on this particular day, the price pretty much confirmed that, look, traders are not confirmed what to do, number one. And number two was that the price tested the 50-day simple moving average again. So we had a one test over here pretty much, and then we had a very good test over here. And now prices are failing to break to the upside, especially failing to break the highs of this particular day. So this was really indicating me that this move is very much exhausting. So unless the price can really come out and then break the high of this one, like it can really move to the upside like this, I have no particular reason to believe that this market is going to move to the upside. Secondly, the RSI, as I mentioned, in a very long time, it has been trading near its overbought area. We have not visited the oversold area since October, 23rd of October last year. So now we are due for a correction, and this correction is likely to happen. So for that reason, if the price comes near 100-day simple moving average, which is this particular area, I am more likely and more inclined to buy this particular market at that point. Does that make sense to you guys? Let me just see some of the questions in the meantime. Yes, replay is available, so do not worry about that. It will be on the YouTube channel, but again, you need to be on a YouTube channel in order to do that. You need to hit that subscribe and like buttons. Why buy at 100 MA? Because this is where institutions are usually buying them. So another another way to answer your question is that, look, over here, the price, the price doesn't really visit its 100-day simple moving average that often. The best one is 200-day simple moving average, because we have a clear evidence pretty much with respect to this one, that when the price crossed below the 50-day simple moving average like it did over here, and the price after that crosses below the 200-day simple moving average, the only move from there onward is very much to the downside. Now, over here, when the price moved above the 50-day simple moving average, the price started to move higher. We had another test over here, we had another test over here, we had another test, the price broke, but when it broke, it quickly bounced back up from 100-day simple moving average. Again, price went over here, it tested the 200-day simple moving average over here, so the price bounced back up again. So basically what I'm really trying to say over here is that the price usually bounces from these levels. If it crosses below the 200-day simple moving average, we know that there's going to be a massive sell-off. If it crosses above the 200-day simple moving average, we know that the price is really going to go to the sky high from here onwards. So right now, if the price is very likely to break this particular price level, but looking at the previous ones, like over here, when the price moved above or price tested over here, the chances are the price will move to the upside. Just like over here, the price tested the 100-day simple moving average, and then again the price started to move higher. There is absolutely no guarantee that the price will move from here, because much better level for me to look at the market is to wait for the price to come to us is 200-day simple moving average, because that would be very, very good trade in terms of that. Or alternatively, wait for the price to come into bigger area of support. So this is your support level number 2, and this is your support level number 1, and this is still your buy level number 1. You can consider that as a good level, but these are very, very good levels for you to consider and for you to keep an eye on. So I hope that kind of answers the question. Let me see if there are where are the questions over here. How I know it's not related to the, okay, hi, I know this is not related to the topic. If possible, would you be able to help me with the download? Okay, so someone is asking about how to download MT4 on Mac. Please contact the sales team for that. Yellow on white broker is difficult to follow. Okay, yellow on white broker. Okay, no problem, Alan. We can change the color, but I think I don't really have to. Okay, I can change the color. There you go. So now you will have no. Let me see if I can change. I think I can change the pen maybe. Then I can just go like that. Is that okay? So then it'd be easy for you guys to have a look at it, right? So we'll just use the pen going forward. So now let's look at the next one. Let's look at the S&P 500 index, see how the prices are really going to evolve from here onwards as well. So for me, first of all, in order to define the resistance and support levels, the first thing that we really need to do is we need to move these particular price levels, because I think that the next support level needs to be below the just near this 100-day simple moving average, because once again prices are very much, first of all, they touched the 50-day simple moving average right over here. Let me go and then draw that, so that they touched it right over here pretty much, and then this is a very good test over here. Now prices are failing to break above the high of this one, so if they don't, then the move is really going to be breaking the 50-day simple moving average and coming right into this area. But at the same time, what we also need to make sure is to have a better area of support. So that better area of support for us for the time being, that means that we need to move our support level number 2 to an area where the 200-day simple moving average is really trading at. So for me, that better level area of support is going to be over here. If the price breaks that, then the next level of support area is going to be right over here. So we have 3 levels of support. This is level number 1, this is level number 2, this is level number 3. This is, of course, the best level, but this is, again, in the medium term, this is very, very good level, because price may never get to here. Price may just come and then test these levels over here, and then it starts to bounce back from here. But at the same time, we can also keep an eye over here, because price is likely to break the 150-day simple moving average, and it can come over here and then start bouncing back from here. So as for the RSI, what we are really looking at in terms of RSI is, once again, the price has been trading in this range. in fairly long time, right? Because 70 is your oversold area. Now it is breaking out of this one and then starting to move lower. What we really want to see is the price coming into this area right over here, somewhere which is below 30 or near 30. This is the area that we really want to see. So, and that is likely to happen. This RSI, which is trading over here, can come up to here into near these levels, and if it does, I think at the time the price which is trading over here can easily come into this area of support. So near is 100 simple moving average. So if the price is over here near 100 simple moving average, RSI falls near its oversold level, that could be one potential trade, because that will simplify, that will tell us that the prices are likely to move again to the upside. So that is the importance of these particular ones. Now, with respect to NASDAQ, let me just quickly have a look at the NASDAQ as well before we wrap it up. Now, when we look at the NASDAQ index, again, what we're really seeing is a lot of weakness coming in. So the first level of support in terms of it as NASDAQ is right over here. So this is the first area of support. The second area of support is going to be, the bigger area of support is going to be where these particular price levels are. And of course, you can draw a third level of support, which is going to be near its 100-day simple moving average. Always try to draw your support levels near these moving averages when they are in play. But when they are not in play, then of course you can continue to put them at a better level of support, and then we do them in our daily analysis anyway. So for now, what we are really looking is for the price to come and test this particular price level, see if it can stay above the 50-day simple moving average. But given the fact that the price did test this one and then it moved higher quite from that, but it is testing again, I think the chances are that price will move and break below the 50-day simple moving average, because these tests right over here, they are happening too quickly, too rapidly, and that shows that the bulls are really not controlling too much of a move. So that is why what I really want to do over here is to make a comparison over here between this and this one, given the fact that they are happening very, very close. So the chances are that the price will fall, the price is likely to fall into this area very easily. All right, so that is the pretty much analysis for these three different indices in terms of finding the levels, in terms of defining the levels, and why they are pretty good. Now, in terms of the answering the first question, why we should be really trading indices, the answer to that question is, folks, because indices can move up and down very, very fast. And secondly, with respect to indices, you don't have to worry about each and every single stock direction, because indices are very much combination of all stocks, number one. Number two, so let me actually see if I can really put them over here. Drawing tools, no, okay, no. So okay, so let me just continue to tell you guys. So let's say that you have a $1,000. Now you want to trade tech stocks. I mean, how many tech stocks can you really trade with $1,000, given the fact that Amazon price, one stock is very, very expensive. Tesla stock is like $700 odd. Apple stock is pretty much, 300 plus. So you can't really trade too much on that. So by going into NASDAQ, you not only get exposure to all the other stocks, all the tech stocks, the one like such as Tesla and all of the, sorry, not Tesla, but Amazon and Apple and Microsoft, but you also get exposure to a wide number of stocks. So that is why when you trade the index, you get an exposure to all the big stocks. So it's the moment that they move higher, the index will move higher. So, by buying one index, you get an exposure to all other stocks as well. So that is one of the main reasons. When you have a small capital, you may want to do that for sure. And secondly, because the movement in the indices are pretty big. So as you can see from these ones, like for the Dow Jones index, you can see that the Dow Jones index can really move 800 to 1,500 points on a daily basis. That is a huge move on a daily basis. So, you definitely wanted to keep an eye on those sort of moves, because a stock isn't going to move that much, but index can. So, and if you are a day trader, that is highly likely to be very beneficial for you because you can find those big trades. So let me just find one or two more questions and before we call it a day. Nasdaq, okay. So Dow Jones on 30-minute, we can do that Dow Jones on 30-minute in our technical analysis. So please follow on the YouTube, on the Twitter, and on YouTube, and we will do that for you. And always make requests if you have any of them at that time over there. What significance can we derive from prices which sometimes go way over 70 or under 30? What should be our attention during this time? Okay, when they are over 70, try to ignore them because prices can stay under over 70 for a longer period of time. But when RSI is below 30, it cannot stay below 30 for as longer period of time in comparison to over 70. So anything when RSI is below 70, as you can see over here, price really move back quickly. But when it goes to near 70, as you can see over here, it can stay there for a much longer period of time. All right, folks, so that's all for today. Thank you so much for joining. Please make sure that, as I said earlier, that you guys go and smash these buttons, on YouTube and of course on Twitter as well, because it is all about putting the plan in action. I give you all this support, all this technical analysis, all these things on a daily basis. It is your opportunity to learn for free. So if you wanted to learn for free, then subscribe to these channels, and then you'll get all that information on a daily basis rather than on a weekly basis. All right, that's all for today. Enjoy your day and happy trading.